you can kindly share. There's a link in the comment section. You can share with anyone that is in your contacts that you believe can benefit from this webinar. Whilst we're also doing that, you can just listen to this short video on our services. Thank you.
Are you looking for a trusted partner? Organization's internal controls and ensure compliance. Welcome to Brandmore Advisory, where we specialize in internal audit, risk management, governance, and performance management services tailored to your unique business needs. Our team of experts is dedicated to providing comprehensive internal audits that identify inefficiencies and uncover opportunities for improvement. We help you navigate complex risk landscapes, ensuring your organization is prepared for any challenge. With our governance services, we strengthen your decision-making process, promoting transparency and accountability at every level. Our performance management solutions empower your organization to achieve its goals by aligning individual performance with strategic objectives. Join the many organizations that have benefited from our tailored solutions and expert insights. Choose Brandmore Advisory for a brighter, more secure future. Visit our website at www.brandmore.com or contact us at 011-0263-052 to learn more. Are you looking?
Thank you once again for joining us. My name is Kudzai Maoneke, and I'm going to be your host for today. As you have heard from the video, we are a dynamic and professional accounting firm. We're based in Midrand, and we do have branches in Zimbabwe and the UK. We are accountability partners, and we live by this daily. We do offer a variety of services that we have at Brandmore. We have secretarial services where we look at company registrations and company amendments. We also have management consulting. We look at process documentation and performance management. Process documentation, we assist you with developing new processes without, and for those who have, we also review the policies. We do audits and audit readiness. We also have internal audit where we look at the effectiveness and the efficiency of internal controls, and we give assurance to the management that they are functioning as intended. We do have payroll services and human resources. We also have tax services. We assist with individual and companies, and we also deal with complex matters which are tax opinion and tax disputes. We also offer accounting services where we look at bookkeeping, your management accounts, as well as we also review of financial statements or assist in the preparation of financial statements, and we also offer virtual CFO. As you know, we are approaching year end, and our topic for today is budgeting and forecasting. This is the time for us to start preparing our budgets. And here at Brandmore, we are a one-stop shop. We are here to assist you with the budgeting, which is a financial plan that's outlining your expected revenue, your expenses, and financial position. And also with the budgets, it's like a roadmap that helps you allocate resources wisely, manage costs, and work towards your goals. Forecasting complement this by helping you predict future performance and adapt to changes and make informed decisions. Now it's time for us to be introducing our speaker for today, who is Mrs. Molin Mkuze. She's a chartered accountant and a registered auditor by profession, and she's also a tax practitioner. She has more than 10 years of experience in this profession. Her experience includes developing and managing strategic business relationships, directing the practice to achieve set objectives, and negotiating and concluding contracts. Thank you, Mrs. Molin Mkuze.
Thank you, Kudzai. Thank you very much for that introduction. Thank you, everyone. Welcome to this powerful workshop, I believe, in preparation for the year to come, as it's always important for businesses to prepare. To be always prepared to always plan and prepare for their upcoming year to come. So at this time, the webinar objective, like what Kudzai have said, that as businesses, you need to be intentional about your numbers, because I always tell people that numbers have a voice, they talk. There's something that they say to the business and the organization. So we're going to, this is the webinar objectives. We're going to be talking about forecasting and budgeting, as many times these are used interchangeably. And we're going to understand what is forecasting, what is budgeting, and also why budgeting as an organization, and why do you have to do forecasting for your company. And I'm going to share a little bit of tips about how to budget tips. So at the end of this seminar, I think if you are able to follow it through, you'll be able to just scribble or come up with a budget for your organization or for as an individual, because budgeting is a principle that you need to ingrain in your in your business or even in your life. And also financial forecasting, I think this image states it all. I think that's the definition for financial forecasting. You are looking ahead, looking through the lens of the longer term and looking at what will be and what can be. So this image, for me, that's the whole definition of what we are trying to achieve today. Okay, so let's get into the basics of it. What is financial forecasting and what is budgeting? So we find out that financial forecasting and budgeting are the two critical components of effective financial management. And when I say effective financial management, it's because they help you as a business to plan. The people that know me and also the people that follows our channel, they always hear us talking about, if you fail to plan, you are actually planning to fail. So when you are talking about financial forecasting and budgeting, we are saying it helps business plan for the future. Why? Why do business have to plan for the future? Because they have to make informed decisions based on what is on the ground. So financial forecasting predicts the company's future financial performance based on historical data. Obviously, you need to look at, when you're forecasting, you need to look at current trends and expected market conditions. So when you are doing financial forecasting, in other words, you are trying to foretell, right, the financial performance of your company. So it's kind of a reflection time where, as a business or as a company, you need to stop and reflect, foretell what's coming into the future, which is very, very critical for any business. It actually involves estimating your revenue, your expense, estimating your cash flows, and depending on the specific periods, because you need to be able to know your business so that at least you'll be able to predict. So this is financial forecasting. You are foretelling the financial performance based on the different trends, what you know from yesterday, what you anticipate to be, and what's happening, what's on the ground. So the key points, the purpose of financial forecasting is to provide a real-time view of where the business is heading financially. Yesterday, I was actually in a meeting as well, trying to do the forecasting and budgeting with our clients. And I found out that some leaders, even if they're leaders, sometimes they think that they are not numbers person. So forecasting and financial forecasting and budgeting is not only for accountants. If you are a leader, you need to be able, because you are analyzing the trends that will happen in your organization. You are analyzing the market trends, and from it, you need to make strategic decision going forward. So it's not only for accountants, it's for leaders and leaders to be. So the focus also relies on historical data. And then when you have historical data, you need to adjust for current economic changes or market trends, which means it gives you time to reflect, strategically reflect the area that I'm operating in, or the situation that we are at right now. What does it demand? It helps you to adjust and look at the economic situations or the market trends so that you are realistic, you are real with what is on the ground. So this is often used to make informed decision. You'll find that when you're looking for loan, they will say, we need a focus. When you're looking for investment, they want you to focus. Why? Because it tells a story. I always tell people that numbers talk. If you're in business and you don't care about your numbers, or you don't even care who is managing your numbers, I don't think you'll be running a business, because numbers tell a story. So this is often used for informed decision about investment, resource allocations, and also cash flow management. Cash is king. So we actually have a video as well that we projected on our YouTube channel where we were talking about cash is king. You can be busy without cash flow, you are not doing anything. So with these predictions that you can put in place, you'll be able to make informed decision and allocate the resource appropriately. So budgeting as well, remember I said these two are used interchangeably. So budgeting is the process of creating a detailed financial plan. So for a period, outlining expected revenue or expenses. So in other words, you are trying to have a plan or targets where you are aiming to be. If you are aiming to spend 10,000 in marketing, whatever the case may be, that's your target. And that target, you would have thought about it depending on different circumstances in your business. So budgets typically cover full financial year and are used to track and control spending. It is actually a policy that we want to ingrain within our management accounting, that all our clients, they need to have budgets so that we track the variance. Because you can't just hit where you don't know where you want to hit. You need to have a target. Everything, when you are doing budget, know that you are applying intentionality in the business or intentionality in your growing your numbers as a company. So the purpose of budget is to set financial targets. It's like a target and control. So it's a target. So, when you have a target, you now need to measure. Did you really hit where you wanted to hit? So it's a control measure as well of aligning what you were expecting and what you are getting at the end of the day. So it focuses on what should happen, right? So when we talk, we're really big at Brandmo. We are really big at planning, strategic planning, and being intentional in running your organization. So when you have your strategic goals, right? You have set your strategic goals. When you have set those strategic goals as well, you now need to find out what are the resources that are needed, right, for these strategic goals to be achieved. So that's where your budget comes in. It's used as a benchmark to compare actual performance. So you can't come to your salespeople to say, no, you haven't met the target when you didn't set the target, or when you think that everyone knows what they need to do. So you need to have a strategic plan as a business. Actually, I'm going to share more about that, because we are actually running a strategic session leadership to strategic session workshops in the coming weeks as well, so that you can help yourself to plan strategically. Then after that, you put a budget that is aligned to your strategic plan. So that's budget. So what is now the difference between this budgeting and the forecasting? Forecasting, like what I said, is a dynamic projection of actual financial outcomes. You update forecast. We always hear about weather forecast, right? Weather can change anytime. So this is like your financial forecasting. So you update it. You always update it. Update it regularly to reflect what's happening, the current trends and the current conditions that are on the ground. A budget is like a fixed kind of financial plan, because you set it up, right? You set it up, you outline expected income, expenses, and the goals for a specific period. So you find that forecasting is kind of like a shorter term where you need to adjust with what's happening. So you have forecasted that we need to have revenue of this, you're anticipating big contracts, etc., but you have that organization, something happened, they changed everything. So your focus needs to change, obviously. And when you are now looking at your budgets, it's already thrown out, because there's circumstances that have changed. So financial forecasting helps companies adjust to changes, while budgeting keeps them grounded. So budget is a target, is a measure, is a control. It keeps your people or the organization are grounded and aligned with their financial goals. Together, these two comprehensive approach to financial planning and business sustainability. If you remember, my tagline for this seminar is, if you fail to plan, you are planning to fail. Whether you are busy, you're a financial person or not, you need to be intentional about your numbers. You need to be able to review them. So the key difference, budget serves as a financial plan for the year based on projection and strategic priorities. So you can't budget without your strategic goals set up. So you need to know, where are you going? If you want to open 3 branches this year, that's a strategic goal that you have. Then now you need to take that strategic goal. What are the financial implications? Okay, 3 branch need us to open an office, or 3 branch, or you are actually going international. It needs you to have license. It needs you to. So you are now setting the financial implication of your strategic priorities. So a forecast is just a rolling tool that reflects real-time financial performance, and it can be adjusted periodically depending on what's on the ground as well. So you need to use both for bigger picture, and budget, you actually use it for bigger picture and long-term, and focus for shorter-term adjustments that respond to the market changes and unexpected expenses. So this is the key difference of the two. So when you look at budgeting, we actually say why. Someone might say, why financial forecasting and budgeting matter? These are the key reasons. So if you are able, or if you are desirous to grow your company, this budgeting and forecasting is a strategic planning tool. Forecast and budget provide a roadmap, a GPS. It's like a heartbeat for your business. It helps business allocate resources effectively. So you find entrepreneur that this year we want to grow. Then you say, okay, what plan do you have to have staff that are aligned to your growth? No one thought about that. It means that the plan, you didn't draw a roadmap of where you want to be. So strategic planning, you can actually fulfill it after you also done your strategic goals. Then you have a roadmap as your budget, helping you to allocate different kind of resources that are needed in that organization, so that at least you'll be able to meet your strategic goals. It's also a risk management tool. It identifies potential financial bottlenecks before they impact operations. So imagine you have already set your budget. Then you, every single month when you receive your management accounts from your accountants, right? Management accounts with the real numbers that reflects what is the, not this profit and loss. Remember, especially when you're a small company, already when you are paying expenses, expenses roughly what you have done. But are you picking the risk management from those financial statements? No. If you don't have a budget, you might not necessarily understand where the bottlenecks are. So it's a risk management too. And it's also performance tracking. You need to compare your variance analysis that we were talking about. Compare budget versus the actual results to identify areas of improvement. Maybe you wanted to go international, and now you find out that there were some things that you didn't even think about that were not even in the budget. And when you are now comparing actual to budget, you see that that means that your planning was not conclusive, and it will help you to track and areas of improvement next year when you are making budgets for your company. It's actually data-driven decision making. So don't make a decision, don't thumb suck decision. Maybe we're gonna achieve this, or just thumb suck to say, we think, because you find out that when you're actually doing a budget, it helps you to reflect. Is this realistic? Is it achievable? Did I consider this? Because you need to make assumption based on the data that you have. So it's a data-driven decision-making, informing critical decisions like expanding operation, adjusting expenses, and securing funding as well. So you find out that sometimes, remember, I always say that if you want to look at budget, look at how people plan their wedding. When you're planning a wedding, you owe one of the best right? But now when you put it on paper, you find out that I can't afford to come in on a horse, right? You can't. So because you're now applying a thought using the data that you have already accumulated, because you would have looked at venues, you've looked at areas and all those kind of things that is needed. So it's a data-driven decision-making tool. Never make a decision that is not backed by data. So budgets actually allow you to do that. So now I want just to share with you some tips now. Someone might ask, okay, we have heard that. Where do we start? These are a few tips. So first of all, you need to analyze historical data. So if you're already in the business, take time. One of our policy with our clients at Brainwar is, if you don't want to give us 30 minutes, you better not be our clients, because we need you to understand your data. We need you to understand what do the numbers mean in the context of your company. So you analyze historical data. So when you have this behavior or a habit of analyzing your data, you already know your data. So you analyze your historical data. So this reveal past revenue streams, seasonal patterns, because each and every month you see that in June, that's when I actually make a lot of revenue, or that's where I make a lot of sales, or in June, depending on your business, I don't make sales. So it also shows you seasonal patterns and growth rates so that you can establish a baseline. When you are doing budget, you can't start from nowhere. You need a baseline. So even if, let's say you are starting, maybe there's someone here who is in here who will say, no, I haven't, I'm planning to start a business. But now what is my baseline? You need to look at other smaller people or other companies that have done a little bit of what you've done, gather some form of data. So when you're doing your financial planning, right? So you review those past trends, seasonal patterns, and growth rates for your sales, for anything that you're actually going to put in there. So it also identify revenue streams, right? So identify revenue streams. You need to identify, if I am in retail, what are the products that I'm selling? If I am in service, what kind of service am I selling? So for example, here at Brainwar, we have secretarial, we have accounting, we have consulting, we have HR, we have different kind of services. So within that, we now say within payroll service, this is a revenue stream. What is it that we are expecting to get? And what are the facts that is backing what we are expected to? So break down your income stream, your product services, your investment, so that you can understand their contribution to the whole financial aspect of the company. So you need also to set realistic goals when you are doing budget. That's another tip there. The other important one, understand your market. Understand your market. It's very, very important. So assess the market demand, the competitor pricing, and economic factors that might impact the sales. So you might say that I want to sell 100,000, but is the marketing economy, are there any factors that have an impact of that thought that you're saying 100,000 sales? So you need to understand your market. It's very, very important. If you're getting into business of cleaning, understand the cleaning market. At least you'll be able to put in figures and put in numbers that talk to the market. Also, you need to factor in the growth strategies. Plan for the initiatives, like new project launches, right? Let's say you want to launch another new product, right? So you need to plan for it and let it be reflected. You can't wake up and say, now we need to introduce XX product, but in your budget, it's fine if the resources are there, but it means also that you didn't dig deep into, is this product going to fetch a revenue, or is this project going to be able to help your organization grow? So plan for the initiatives. I am a fan of planning for where you want your company to be. So like now, a lot of people are saying we're going into holiday, but this is the time to plan for your next year. Plan your initiatives, new products. Rest in January. After you know that you have planned, you know everything is set, you have done your strategic sessions, you have planned for your next year, your team knows where you are going next year. So everyone come knowing where you are driving the business to. Marketing campaigns as well, plan that. customer acquisition efforts that can drive the revenue. You need to actually plan for that. So look and put in factors in growth strategy when you are planning your budget. Also incorporate pricing strategies as well. Align your pricing model with costs, value deliverable. Some people will just say, no, I'm going to sell this for 100 rand, right? So I have one of my clients that we're actually assisting to say, okay, if you're ordering this, like you're costing, what is the actual price that you need to charge for you to be profitable? So it's not a matter of saying XX is selling at 50. Maybe XX is getting that cheaper, or the supplier of XX is their relative, or it's a group of companies. So you need to have pricing modules that actually put in costs and a lot of different costs that impacts that, and actually benchmark also with your competitors so that you maximize profitability. So these are the tips for budgeting when you start your budget. So I think I'm left with 3 more. Consider external factors as well. I think I've spoken about that. Your economy, industry change, regulations. If you are regulated, that could impact that particular revenue stream. I think when I'm talking, you understand that budget is a plan. It's a plan. You sit and you plan. It's not a 1 day. It's not a 2-hour thing to say, no, let's do our budget, we are done. But it's a plan. It's a strategic plan that you actually need to consider different things. If it means researching on that particular line, you need to do it. For monitor sales pipelines as well. For example, for service-based business, estimate income from contracts or agreements that you have or project timelines. You need to monitor the sales pipeline when you are thinking of budget as well. If you're taking a lot of time, So if you're taking a lot of time, apologies for that. There was just a feedback that I was getting. So if you are taking a lot of time in acquiring customers, then you're saying each and every month we need to acquire 10, but for you to acquire 1, you need 30 days. Can you see that the alignment there will not be there? So include also conservative or optimistic scenarios to prepare for the unexpected fluctuation in the revenue. You need to actually monitor this, your actual revenue. You need to monitor your actual expenditure as well in tracking, which is what we call budget variance when you are getting your management accounts. So now we have talked about the tips. So when you are sitting now, you need to apply all those tips. Please just send us an email should you want this, also this slides, so that at least you can apply that. You send an email. I think our team is going to put in their email addresses, our email address on the chat, so that we can share with you. So when you are sitting now and plan for the future, you take into consideration all this kind of consideration that we're talking about. Alternatively, we also assist our clients in planning for budgets. We have sessions with them. We run a lot of sessions helping you to foster that. So budgeting and these are the best practices. Always, they are almost similar to the tips that I've actually shared, but these are best practices. You need to use historical data, right? Analyze past financial. I cannot emphasize that more enough, right? You need to have a baseline, analyze that, and look at define clear goals and objectives, set specific objectives, revenue growth, cost reduction, so that you can align your forecast and your budget with the company's overall strategy. Review your regularly review and adjust your forecasts, and utilize a rolling forecast. A rolling forecast is typically 12 to 18 month model. It allows you for ongoing extending the forecast horizon every month or every quarter. So you see, forecasting, you'll be looking at what's on the ground. If you need to change, you say, okay, for the next quarter, guys, this is what we are anticipating, because we would have considered what's on the ground. And also, you need to incorporate scenario planning, worst case, best case scenario, put that into account. You actually, when you're budgeting, you need to leverage financial tools. We have a lot of templates as well for our clients that we tailor-made. Insurance clients, we have set templates already. The clients that are in retail, clients that are in different industries set, but we do have a simple template that we can actually share. You can also send your chat to our team as well. I think Kudzai sent an email on the chat, then we can share with you those simple templates that you can actually use. Leverage technology and financial tools, budgeting and forecasting software, streamline the data collection. If you have data already, you were using management accounts so that at least you'll be able to streamline and gather the data so that at least you'll be able to focus. Align budget forecast in departments. To find out that, hence I was saying budgeting and forecasting is for everyone. It's not only for people who are in finance. Because if you are leading a department, you need to come up with a budget. Tell us your budget. What are you expecting? What is your growth trajectory? And what financial support? So finance is there to just collaborate and now match those budgets. But the leaders in each and every division should be able to do their budgets and actually communicate between departments so that you align between operational and financial forecast. This will ensure that resources within the group or within the company is allocated and it matches the strategic goals of the organization as a whole. So when you are attending this, don't just attend as the owner or as the business owner of the company, but you need to bring in your leaders because they need to be able to sit down and say, if you are in a certain division, this is what we want to do. You might not be able to think about the resources that they will need, the financial impact of that. So it's very, very critical. So monitor key performance indicators as well. We are big in performance management. So, but we can't set performance management without clear strategic goals, clear budget targets, or the targets that we want to achieve clearly spelled out. So regularly track KPIs like your cash flow, very important. So there are key KPIs that you need to get from your management account, from your accounting, right? Your cash flow, cash is king. Your profitability ratio, you need to assess, are you making profitable? Or you are just servicing, you're like an NPO, but in a PTY, right? So you need to make sure that you track your profitability ratios, your operating expenses allows for you to make swift actions or decision. If the results deviate from the forecast, then you know what you need to do there. So budgets, this is just a few steps in building a budget. First of all, slide is moving on its own. First of all, you need to analyze, like what I said, the past performance, and you can actually you look at what is your past performance, right? It's very key as a baseline. Allocate funds and resources to different where you need to allocate. I don't know why my slide is moving on its own. Can you help me? Just a second. Okay, so I think it's fine. So you need to actually create, you need to analyze past performance, forecasts, utilize software, you need to do reporting, invest in software. I always say that you need to always invest in your systems or in softwares that helps you. Like if you are using QuickBooks Zero, some of these softwares now, they actually help you to plug in your budget so that you'll be able to forecast very well. So obviously, when you're budgeting, you need to understand the key performance indicators that you need to achieve within the organization. So three-way for cash flow forecasting, someone might ask that. So it integrates data from your income statement. I know if you know your financial statements very well, we have an income statement, you have a balance sheet, and you have your cash flow statement, so that you can offer a holistic view of information. So the benefits of three-way forecasting. So I always see that people normally forecast or budgets on using the income statement only, but they forget that they want some investments to be made, which is your capital expenditure that is coming from the balance sheet. Or they also forget to actually manage or budget on the using the cash flow. How much cash are you going to get from everything that you are going to do, from investing in capital expenditure, from the products that you are selling? So three-way forecasting is a very good that you can actually use. It integrates the data from both income statement, balance sheet, and also cash flow statement. The benefits of three-way forecasting, it predicts cash flow needs accurately by showing how your net income and your expenses impact your cash. So it needs to understand, you need to understand the impact or the correlation between what is happening in your income statement, where you show your revenue and your expenses. How is that going to affect cash? Like what I say, cash is king. It helps actually identify cash flow gaps and plan for shortfalls in advance, because you would have looked at your income statement, how it impacts the cash, how your balance sheet is also affecting the cash flow as well. So for planning for tax, for budgeting is also very important, because you find out that at the end of the year, when you are, let's say you have budgeted or you have forecasted, you forget to say what is the impact of whatever profits, a lot of profits that I'm making to the tax. Or how much tax will I make? So when you plan accurately, or when you budget and forecast accurately, you integrate all relevant tax obligations and incorporate them into your monthly and annual forecast. You should not be shocked that you need to pay us 100,000 at the end of the year. Those that are shocked, they didn't plan their budgets very well. So consider, when you are now planning now, you now need to consider, are there any tax efficient budgeting strategies that I can put in, like claiming all eligible deductions and credits? So when you are now putting your budgets in place to say, okay, these expenses, what are the allowance, what are the deductions that we can actually take the bank so we can reduce the cost of that? So you can actually get that help from your chartered accountants as well, your accountability partners like Brainmore. So you need to consider tax-efficient budgeting strategies as well when you are doing your budget. Avoid tax surprises. Set aside a portion of your monthly revenue to cover your quarterly or your annual tax payments, so that at least you would have planned your budget accurately. Don't just plan expense, income versus expense. You forget that tax we cannot avoid. Two things that we can't avoid: death and tax. So unfortunately, we can't avoid that. So plan for it as well in your budget. So budget checking and use approval workflow, you can actually put that within your organization to say, guys, marketing department, you have said you want to spend 100,000 in marketing this year, and these are the strategies and things that you said you want to put in place. So then we're gonna approve based on what you say you want to do. Should there be anything that changed from the plan, you need to bring it forward. Then it needs to be authorized. So you need to schedule monthly budget reviews with your departmental leaders. So each and every department should submit their budgets and consolidate that, the division. Then do monthly budget reviews to ensure spending is aligned with projections. Have you noticed that sometimes you say you want to spend, even on an individual basis, you go to the shops saying that you want to buy XXX, but you find out you're coming out with a basket full of things that were not planned. But as an organization, you don't have the luxury to do that. So you need to also review, do variance analysis. If you had planned to get 100,000 this month, why didn't you get 100,000 from your department, right? So that at least you can put in strategic measures to say, okay, so next time we see that we didn't actually implement the marketing strategy that we said we want to do in January, right? And you carry forward. So implement approval processes, that's a control. We also big in control setting within the organization. Implement approval process for significant expenses to prevent unauthorized spending. I always tell, especially if your business is still growing, do those policies and procedures in place. Approval process. For you to buy something, where does it go? How does it start? So that at least it aligns with your budgeting as well. You can also use bill approval workflow tips, use digital workflows to manage approvals and track spending. And you can also assign spending thresholds to different levels of approval to streamline decision making. So overestimating expenses is actually something that you can also put in, right? Sometimes it's very good to put your expenses Don't be so strict to the dollar, because it builds a cushion. You need those cushion. Like who knew that COVID is going to happen? There are a lot of unexpected costs that companies ended up incurring. So you need to build that cushion of unexpected costs. And it also prevents cash shortages by creating a buffer in a higher cost month. But you see, you need to be very careful. Don't tell your team to say, no, this we put higher, because people always want to spend to the maximum. I think if everyone is given a budget, we always say, I always hear this in public sector as well. We still have something to spend. Let's spend it now. You get it? So you need to be very, very careful also with this. So how to include contingents line? You can just say, within our budgeting as a policy, we have a 5 to 10% contingent of projected expenses. If your whole expenses are 100,000, you can say we're just gonna put them at 110. We are putting a 10% contingent for any expenses, unexpected expense. So reassess the contingent funds as well, maybe on a quarterly basis, to ensure that it's accurate and we maintain flexibility within the organization. So after you have done division, I always like, if you have different departments and division or service lines, right? Make sure you do those divisional budgets. Afterwards, you consolidate the financial reporting. So it combines financial results from multiple business units or departments, providing an overall holistic picture or overview of the total financial health. So remember when I was talking about budgeting on the revenue budgeting, when you have different streams of revenue, break down your streams of revenue. If you have different units that are incurring costs, break down the costs that each unit is incurring. So at the end, you consolidate that. Don't lump everything. When you know exactly that you have different even departments or different location, let every location bring a budget, then you consolidate so you can have an overview of that. So it benefits you for decision making, because you can visualize how each unit or each department is performing based on what you would have put in place. You can visualize your company-wide as well as an overall, the performance revealing the profitability or underperforming areas, because it's very critical. There can be divisions that are doing a lot of sales, doing this, but they are not profitable. But if you don't set it that, you would think that this division is performing well. And there are divisions maybe that have lower revenue, the products are not going as fast as they should, but they are very profitable. So it also helps you to say, where are you going to put more effort? Which division are you going to put more resources as well? It facilitates better planning and resource allocation by understanding the whole financial picture of the organization. So key takeaways, as I'm wrapping out, start budgeting and forecasting early. So most companies that we actually serve, their financial year end is February, right? So start budgeting for 2025 now in December or in January. Start having those meetings so that at least you forecast, you look into the future, you look into where are we going into 2025. Use a 3-way forecast. Like what I said, don't only budget from using income statements only. Look at the impact of that into your cash flow. So if you look into impact, let's say you have revenue, let's say expenses, and you have sort of like a profit, cash profit, or whatever the case may be, the profit that you're going to have, and it's only 100 rands, which means that the net effect is 100 rands. So which means your bank balance is going to increase for that particular moment by 100 rand, because it's an in and out. So use 3-way cash flow forecast to gain a comprehensive view of your financial health. Implement structured approval, workflow, control for spending, and prevent overspending. How do you prevent overspending? Budgets, in approval processes, so that at least you can actually manage the cash flow. A lot of business struggles in managing cash flows. A lot of business actually close shop because they can't manage cash flows. Cash is king, right? So you need to be able to know how many days are our debtors taking to pay us. So which means you are now looking at your receivables, which is you're taking your balance sheet. When you are budgeting, take the balance sheet, take your receivables there. If you are sitting, people are paying you 50 after 30 days, then you need to be able to know that when you are budgeting, what is the impact of the sales that you are saying you are making into the overall picture, into the cash flow. So choose best practices that we spoke about, like what I said. Send us an email, drop an email. We're going to send you these slides so that it will help you. And we are there as well. Book a session, we're going to guide you. Then we tell you where to do, what to do, or we can do the whole budgeting process with you. So I think we are done. Any questions? You can raise your hands and the team is going to unmute you, or you can unmute yourself, then ask any questions. Should you be viewing online, you can just put in questions, then our team is going to answer from there. I can't see hands. Could I, maybe you can assist me if there are any hands? Are there any questions in the chats or?
There are no questions yet.
Okay. No, I think it's fine. In the absence of questions, it gives a confirmation that we have understood how the budgets work and how you're going to put in budgets. So what's coming, I'm just going to share what's coming as well so that at least you prepare. So we're actually running a leadership accountability accelerator workshop. So should you be in here and you want to take advantage of this and we're going to give you a discount, send us an email. The team put in the email that they can share to, because if you go buy it online, you won't have that discount. I think, is it there online if it's there? So this is the code that you can use for that as well. So we are also having internal audit function free webinar that is happening on the 21st of November, that one of our directors are going to handle internal audit, looking at what will be covered, the standard changed on internal control. So one of our directors is going to dig deep into that. So you can register as well on our platforms. The details are there, governing the internal audit function. The internal audit function, which is your internal audit function of your business. So you're welcome to do that. Over to you, Kudzai.
Thank you so much for everyone that has joined us, and we're hoping to get some questions so that we'll be able, as we have our speaker, will be able to assist us. For all those ones, I hope everyone who needs some assistance from us will be able to register, has given us their email. There are some emails that we have taken down, and if there isn't anyone who has given us an email, they can still drop it down. And if there's still anyone who has a question, we are still giving them time. It's your time now to ask anything. If not, we also have a link that we have shared with you in the chat. You can also check a link for Leadership Accountability Accelerator. You can see it in the link that you can also click and register. Please remember that. Yeah, I can see there are no hands. This is your time. But if there are no any other further questions, we are done. Thank you so much for joining us, and we hope you also join us in the next coming up webinars, and we'll also be sharing with you all the links that we have is we, as Brandmore, we do have a lot of webinars that are running, and we want to assist our clients and even those who are outside. So thank you so much, everyone, once again for joining us.
Thank you.
Yeah, it lasted that long. Yeah.
Now please because I was still waiting. But it's time.
I think you're just closing out the meeting.